Good day all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Thursday, the 17th of December, 2020. Time right now just after 6 p.m. Central Time. So we've had this phenomenal run-up in stock indices. Other than the Russell, in all fairness, the chart pattern hasn't been the ideal pattern. That doesn't mean the trend isn't up in terms of, you can see we're making new highs and all-time highs. The good news keeps coming. Moderna's got through the FDA today. Now it goes into the CDC and one other committee, and I would assume that sometime next week we're going to see the vaccine rolling out there. We're still looking and hoping that the government doesn't close tomorrow, because there is, at least as I'm doing this, there has not been a deal made between Congress to roll out anything in the way of the COVID relief. They keep claiming they're getting closer. It's almost like Brexit. They're getting closer and then they fall apart, closer. There's nothing there yet. Over the weekend we may get it, but you're up so much. Is it the old buy the rumor, sell the fact? I don't know. I had one person write me that's watching this and said, Ira, aren't we in the Santa Claus rally? Yeah, you are in the Santa Claus rally. You don't have to be there in December. You're rallying right up to it, right up to December 25th. Whether you keep going, I can't tell you, but it's a heck of a rally. You're getting it. And even the metals joined in with big moves to the upside today. So as you look at the S&P, come on, you're up 60 points for the week so far, up 1.65%, a new all-time high on a closing basis was for Thursday. We'll see if it holds up through the week. In the S&P, you can see how you're churning the market higher. And at least in the S&P, you have the trend of higher lows, higher highs. I like that. What else? The market's held that 18-day average, that key number. So where's been the resistance? Well, if it's not any of the key averages, which are all under the market, it's likely the Bollinger Band, and it's right here at 37.24. That's where I'm looking for the resistance point in the market. I think the pros will take money off the table if they can get there tomorrow. When we look at momentum, it's overbought and trying to go into an embedded reading. What does that mean? I don't want to include tonight's numbers for Friday. If we look at the Thursday numbers, both numbers were over 80. Not the day before and not the day before. You need to get tomorrow and through Monday, 3 days in a row for stochastics to embed. Then we treat the market differently with a more bullish stance. Right now, the market is overbought, approaching a resistance zone, bias up, trend up. When I look at the NASDAQ, this is what I meant, not one of the prettier charts. Lower low, higher high. It is trying to embed. Again, I can't count Friday because I don't know how Friday will finish. But both numbers on Thursday were over 80, and both numbers the day before, not the day before that. So tomorrow, this market could be the first to join that parade of embedded readings. What happens when you embed is, when that happens, to me at least, it signals that the pros start buying the pullbacks in the market until the red line closes back under 80, target the upper Bollinger Band. It's as simple as that. There's ways to come in. I use different moving averages to do it. For entry, it's all revealed when you take my morning subscriber video. It's all there. It's also revealed in my ETF, Spider ETFs. They're there too for my subscribers. In the Dow, you're knocking on the door of the resistance point. You're overbought. I'd be very careful. Nothing grows to the sky. I'd just be very cautious right here. This market could be ready to ring the bell. And the strongest chart has been the Russell. And it comes down, let's pros in, I guess, in some manner. I haven't seen where it's been easy to get in on these breaks and coming up. There's something important. You know, I'm not capable of catching in this technique every single move to up or downside. It's not what it's designed to do. It's designed to keep me from being short in an up market that's going up, and try to, on the criteria that I set, to tell my subscribers to buy and where to get long. If it were in a downtrend, by my criteria, that's what it's trying to do. That in itself is a winning strategy. It keeps traders from saying, oh, it's high, let's go short. And I'd be going, why? It's one thing to come out of long positions. It's very different than fighting a trend. In the VIX, no surprise here. Remember we were talking, I said it's in a pipe and now you start spinning and throwing traders back and forth. That's just what's going on. You're churning away at this point in time. In the T-bond market, I think you've got to say that you've got a pattern of lower highs, lower lows. The trend is down. The bias is down. I think the pros are selling at 173.6. Their stop has to be at 174. It's nearly $1,000 risk, not for the faint of heart, and certainly does not fit in to the way that I normally put out trade recommendations. I use money management. So the most I'd use on a high-risk trade is $600. And then I break it down to a low-risk trade, and I give you in my written updates how that's all broken down. And I can even explain it with when I went back over time, testing those parameters in the market. I'm also realistic. My traders don't come in with $10 million and say, let's trade a contract. They're coming in with X amount of dollars, and they care about the loss to the margin they're putting up. And I think you got to care about that. But in any case, I look at the resistance here, supports back at 171.14. I look at the 10-year note. It is different here. If we look at the last rally high, this one, you got up to 138.4. You rallied up now to 138.4 again today. You're backing, then down. This is for tonight. So you've still got the lower highs. I'll call that lower highs, lower lows. But the bias is up. The market's just sort of sitting here, and it refuses to close under the 18-day average of closes. In the dollar index, this is a cover short area. I know people are going to go, what? It's going to keep falling. That's not what my work is saying. And my work isn't bullish. It is saying that the smart money, and that's what I call it, smart money, is taking money off the table. They'll drop stops down if they have multiple positions tight. If it bounces, they'll have selling power. If it embeds, which it is, they'll be able to play that game. Eurocurrency is the flip-flop of it. Higher lows, higher highs, profit objective up here. Embedded reading. Will you get up to those numbers? We'll find out. The pros, I think, are buying these breaks, looking to get up to those numbers, the upper Bollinger Band. When you're over a Bollinger Band, do you want to be long a market? The answer is, do you want to put on new positions on that? No. 95% of the time, you will not stay over a Bollinger Band or under it, 95. And each consecutive close over it takes away a percentage point. So you get to the point where you'll say, well, Ira, what if you get beyond it? It's just a sign of strength. Remember what we talked about? You're in an uptrend. You're not looking to go short, but you're looking for reasons when you get up to these, where should I take my money off the table? That's what people have to learn. That's what I teach in the charting course. In Bitcoin, this was a breakout, and it certainly caught me off guard. Certainly not getting caught on shorts. You've been over that 18-day average, but really an interesting move to the upside. This is Brent versus Wti Crude. I don't know why it moved like that. And as I told you, every one of these markets, I was mentioning it this morning in my subscriber update, you're up to the area where I expect the pros are taking money off the table. You're at the upper Bollinger Band, at the upper Bollinger Band, at the upper Bollinger Band. And this was a fake out today. Let me show this. This market, this was the number I had been looking at, 27.11. The market comes up, and now if it takes that number out, I would think that you're going to get some buying in the market. It did, but then it drops down, didn't quite take out the 259.6. So it was an outside day down that didn't stop the traders up, but it had no leg to the upside. Now it's jumping back up to put those traders very close back to where they got in, but not quite there. And it's a difficult trade. This market just doesn't get going. And the numbers that keep coming in it aren't the best numbers, and I get why. Want to remind you, and I won't be mentioning it again, tomorrow, this will be the last time I actually mention it. Tomorrow ends my Cyber Week special to get my free charting course. $249.95. You can see the course right on our website. It is there. The idea is any of the research products I have that you buy for a year during this Cyber Week special, I will throw in the course. Just buy any of them. Believe me, we're going to give you the course. We'll turn on the course when you tell us to do that. You can give it away as a gift. You keep it. What's the advantage of the one-year subscription? Well, number one, you get a price reduction. So that helps a lot. Number two, you get all the products we had. I had one person today write me that I'm nickel and diming him. Now, he bought yesterday the Spider 1 month. 1 month. I've never seen this man's name on anything. I don't understand how $8.95 is nickel and diming somebody. He gets, and every subscriber gets to come into the webinars for free, gets the special reports I do for free, and gets a 20-minute video 5 days a week, and then on the weekend, a full week video. But he didn't like it, and I get it. I respect it. He saw it one day. I guess it's no good for him. Ha! Give it a try. Even I know you give something some things. And by the way, the Spider video is where I'm doing the best. So I don't know what he doesn't like about me. But you know, I'm not running a popularity contest. What I'm doing here is giving you information. And I try to cover everything. I cover all these markets. Let's assume you want to look at softs. You don't have to go through all these. There'll be a slide bar here on our website. Just grab it and pull. You're right where you want to be. Let's assume that you like currencies and they play and you said, oh, I want to go back to the beginning of it. Grab the slide bar, pull it back. It says currencies. It'll play exactly how you want. Everything is meant to help you with your enemy being time. You can watch these videos over and over and over as long as you keep the tab, your window open on your computer. Close it, we count it as a view. You only get X amount of views. It's not meant to be passed around. Do you blame me? I don't think so. I mean, that is the goal. This is my livelihood, and I'm not going to be cheated out of it. So how do you work with this? It's simple. If you don't want to go for the 1 year, that's fine. $7.95 for the first 30 days. No free charting course, but you get everything that you'd get otherwise anyways. Now, you want to find out more? Go to our website under research and away you go. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.